Let's take a look at your markets action, kicking things off with the JSE. Local markets slightly pulling back today after days of gains. Commodities uptick not doing enough to lift the bourse today. Safe haven bets boosting the resi though, with silver and gold at record highs. And with that, we are seeing the financial 15 shedding 0.5%, the industrial 25 down close to 0.6%. Trading in the opposite direction, however, is the resi 10 up close to 0.7%. Taking everything into account, the all share shedding 0.2%. Stateside, sentiment remains sour due to increased geopolitical risks, particularly protests in Iran. Traders on that end are also digesting mixed bank earnings and a producer inflation print. With that, it is red across the board, with the Nasdaq leading those losses down 0.9%. The S&P 500, in the meantime, shedding over 0.5%. The Dow Jones down just 0.25%. Across the Atlantic now, trade remains mixed on that front, with investors following geopolitical developments while awaiting British GDP figures out tomorrow. We are seeing the FTSE 100 in the green, gaining close to 0.3%. The CAC 40 pretty flat there, just eking out some gains at 0.01%. But trading in the red is the German DAX, losing 0.48%. Now let's take a look at what's playing out in the currency scene, starting things off with the local unit. We are seeing the rand remaining pretty steady against major global currency pairs. Some losses coming through, slight losses though. The dollar to the rand pair flat at 16.37, the pound to the rand just above 22, and the euro to the rand just above 19. Looking at your other currency pairs, the euro to the dollar flat at 1.16. Making losses there is the pound to the dollar at 1.34. And then the dollar to the yen pair sitting just above 158. And for a preview of that market action, Ntaoleng from Sasfin Wealth joins us now. Nziga, thanks so much for your time today. Happy New Year. What are you making of market action at the moment? Is the rally we did initially see running out of steam, or is it just a rotation outside of US stocks? And perhaps we're seeing investors now take a closer look at emerging markets and the likes of Europe.
Good afternoon, Ntaoleng, and thank you so much for having me on. I know it's certainly been an exciting start to the year. I think certainly with the policy changes and kind of swift movements we've seen come out of the US have really destabilized what we know as kind of normal global economics. But from our perspective, we're certainly seeing a rally as the rest of the market is in precious metals, namely gold and silver and the PGA metals. We're seeing the RSI running ahead, I think 14% up for the year, when the rest of the JSE is only up 4 or 5%. So it certainly seems to be more of the same, continued safe haven buying, and I think gold now has exceeded bonds and cash as the #1 store of value globally. So we're certainly in a new paradigm, and I think investors are really looking to places where they can place their funds and ensure that they'll at least remain consistent in the value that they hold.
One thing we know for sure is that all that glitters really is gold. Nziga, we will catch up with you again at 6 p.m. That was Ntaoleng from Sasfin Wealth.